Have you ever wondered how the share market works? Picture it as a bustling marketplace, but instead of fruits or clothing, here we trade in shares of public companies. It's a vibrant hub connecting buyers and sellers. The share market is a hub of activity where fortunes can be made and lost. So how does one invest in the share market? The journey begins with opening a demat account with a broker. This is your gateway to the world of shares. Next, it's time for some research. Choose shares of companies that you believe have potential. Once you've made your selection, you buy those shares. But remember, don't put all your eggs in one basket. Diversification is key, and think long-term. Rome wasn't built in a day, and neither are fortunes. Investing in the share market involves careful planning and strategy. Do you know about the different options available in the share market? There's a plethora for you to explore. The share market offers a variety of options to suit every investor's needs. Before we dive into the different types of investments, let's start with the most basic one: investing in individual stocks. When you purchase an individual stock, you're buying a piece of ownership in a company. This gives you certain rights, such as voting on corporate issues and receiving dividends, which are a portion of the company's profits distributed to shareholders. But remember, with great potential for reward comes great risk. The price of individual stocks can fluctuate dramatically, meaning you could make a fortune or potentially lose your entire investment. It's a high-stakes game and requires careful consideration and research. In the next scene, we'll explore the first type of investment: individual stocks. As we move away from the roller coaster ride of individual stocks, let's look at a safer investment option in the share market: bonds. When you invest in bonds, you're essentially lending your money to the issuer in exchange for periodic interest payments and the return of the bond's face value when it matures. It's like being the bank. Bonds are considered less risky because they provide a fixed income over time, making them an ideal choice for investors seeking a steady income stream. But remember, lower risk often means lower returns. In the next scene, we'll delve deeper into the world of individual stocks, exploring the differences between growth shares and value shares. Stay tuned. Before we dive deeper into the world of individual stocks, let's take a brief detour to explore another significant investment option: mutual funds. Think of mutual funds as a basket of investments. Instead of putting all your eggs in one basket, or in this case, all your money in one stock, mutual funds allow you to spread your investments across a wide range of stocks and bonds. This diversification reduces the risk of losing your entire investment if one company doesn't perform well. Mutual funds are managed by professional fund managers who make investment decisions on your behalf, and they can offer the potential for balanced growth. Remember, diversification doesn't guarantee profits or protect against loss in declining markets, but it can help spread risk. In our next scene, we'll return to the world of individual stocks and look at the differences between growth shares and value shares. Stay tuned. Before we return to individual stocks, let's look at exchange-traded funds, or ETFs. Just like mutual funds, ETFs allow you to diversify your investment across a broad range of assets. But unlike mutual funds, ETFs can be bought and sold throughout the trading day at fluctuating prices, just like individual stocks. This makes ETFs a popular choice for investors who want the diversification of mutual funds with the flexibility and ease of trading that comes with stocks. ETFs can offer a balanced growth potential, making them a valuable addition to any investment portfolio. Keep in mind, all investments carry some level of risk, and it's crucial to do your research before diving in. In the next scene, we'll dive back into the world of individual stocks, looking specifically at growth shares and value shares. Stay tuned. Before we delve deeper into individual stocks, let's take a detour to explore future and options, also known as F&O. These are advanced financial instruments that provide leverage and are typically used for hedging. Essentially, they allow investors to buy or sell a particular stock at a specified price on a future date. This can potentially yield high returns, especially when market predictions are accurate. However, it's important to note that while F&O can be lucrative, they also carry a substantial amount of risk. So, it's crucial to thoroughly understand these instruments and carefully consider your risk tolerance before investing. In the next scene, we'll be back on the path of individual stocks, specifically focusing on growth shares and value shares. Stay tuned. Growth shares belong to companies expected to grow at an above-average rate, while value shares are from companies undervalued by the market. Are you aware of the potential rewards and risks associated with the share market? This dynamic marketplace offers a chance for substantial financial growth. Just imagine your investments potentially multiplying over time. But don't let the glitter blind you. There are risks too. Markets can be volatile, and investments can go down as well as up. That's why due diligence and risk management are paramount. Remember, the share market isn't a gamble, it's a calculated risk. In the share market, the potential for growth is immense, but so are the risks. Invest wisely. So, are you ready to dive into the world of share market investing? Remember, knowledge is your greatest ally. With wisdom, patience, and responsible investing, the share market can offer considerable returns. The share market is an exciting world, full of opportunities and challenges. Navigate it with knowledge and caution for a rewarding journey. Let's now take a visual journey to the vibrant world of the Indian stock market. As we pan across a bustling photo of the Bombay Stock Exchange, consider the story of Infosys, a leading tech giant. From being a small startup in the 80s, Infosys has grown exponentially, mirroring the country's technological progress. Visualize this growth as we depict the stock value soaring, symbolized by an animated rocket piercing through clouds, reaching new heights. This is just one example of the potential growth in the stock market, reinforcing our belief that with knowledge, patience, and responsible investing, your financial goals are within reach.